Exercise 1-32. We're going to continue working on Wilford Towing Services financial statements, and this time we're going to create the statement of owner's equity, which is the second statement. Here is the formula for the second statement, which is called, of course, the statement of owner's equity. And what it's showing is it's showing what's happened to capital. So before we talk about what's happening to capital, let's look at the balance sheet. So the balance sheet, the formula is basically the accounting equation. Assets equals liabilities plus ending capital. And ending capital just means the capital at the end of the period. So remember, the accounting equation is listing everything that the company has, which is assets, and then the other side of the accounting equation, liabilities and capital, it's showing who owns those assets. Are those assets owned by others, like the bank, or are they owned by the owner, which is represented by capital? So capital is something that the company wants a lot of. You'd much rather have capital than debt, which is the same as saying liabilities. So let's get back to the statement of owner's equity. So the statement of owner's equity is showing how did our capital change. So we start with beginning capital, and by beginning we mean just like the beginning of the time period for which this financial statement is showing. So if this financial statement is for a year, a calendar year from January to December, then beginning capital is just simply the capital of the company on January 1st. And then we're going to add owner investments. And owner investments are also known as owner contributions. So an owner contribution or investment, I like to call them investments, but the book likes to call them owner contributions. So owner contributions or investments are just basically when the owner invests cash. It's usually cash. It could be assets like a lawnmower for a company that does landscaping. An investment is when the owner puts cash into the business to be used as or for the business. And then we're going to add net income, and then we're going to subtract withdrawals, also known as draws. So when I learned accounting, the acronym that we tried to use when we had to memorize this was BIND with an E. So beginning capital, I is plus investments, N is plus net income, and D is draws, subtract draws. And then that gives you the capital at the end of the period. So what you're hoping is that the capital went up, obviously, during the year. And then let's say the capital went up during the year. Would you rather have it going up mainly because of investments or net income? You would much rather see the largest source of capital being net income, everything else being equal. So let's go back to the statement of owner's equity for this exercise, and we're going to use this formula, bind with an E, to create Wilford Towing Services statement of owner's equity. So we have our box again of their randomized accounts. They're in random order. And we also have the income statement. We only need this when we get to the net income. The net income will be found here because it's not found over here. All right, we're going to start the statement of owner's equity with the same three-line heading. So remember, the three-line heading of any financial statement, the first line is the name of the company. The second line is the statement that we're creating, which is the statement of owner's equity. And the third line is a time period. So let's go back up here in case you forgot from the previous problem what the time period is. It says we're doing it for the month ending in June. So it's for the whole month of June. So month ended June 30th. It's not a single day. We're doing it for a whole month. And you can also tell that we're doing it for the whole month because our labels say capital for Wilford at the beginning of June, and then here's capital for Wilford at the end of June. So that's another way to know what we're doing it for, what time frame. So to find the beginning capital, we have to go look over here. So here is Wilford's capital on June 1st. So I'm going to copy and paste the $7,700. So they started with $7,700 of capital. And remember, our formula was plus investments, also known as owner contributions. So think of that as either one, owner contributions or plus investments. So normally owner investments would be found in the capital account. They did not give us the capital account, so we can't look at the capital account to know how much the owner investments were. So reading right here says, assume the owner made no capital contributions during the period. So we know that owner contributions are 0. And going back to our formula, the next thing we're going to use is we're going to add net income. And remember, this is the second financial statement. The reason we're doing it second is because we had to calculate net income first on the income statement, which we've done, and they've given us a box for that. So here's their income statement, and their net income is $10,300. So I can copy and paste that. Net income for the month. We're done with that window. So now this is just a subtotal with no label. So I'm going to take 7,700 plus 10,300 gives me 18,000. And then going back to our cheat sheet with the formula, now we're going to subtract draws, also known as withdrawals. So remember, withdrawal is when the owner takes cash out of the company. It's almost always cash. It could be other assets, but it's almost always cash, and uses it for personal use, like taking money out of the business to buy groceries or to pay her cable bill. All right. Let's see if we can find withdrawals. Here's the withdrawals, and it's $2,000. Okay, now remember, we have to subtract draws. Remember, draws lower capital. And net income, which is profit, that increases capital. That's why we added net income. And investments also increase. Investments, also known as, remember, owner contributions, they increase capital. That's why we added investments. So now I'm going to close this box and then scroll back up here because there's a little bit of nitpickiness going on here with my accounting lab. Remember, it says, assume the owner made no capital contributions during the period. And then it says, use parentheses or a minus sign to show a decrease in capital. Now, a lot of times my accounting lab does not make you put in a negative sign. For example, when we did our income statement, it did not force us to put a minus sign for expenses. But this time it is forcing us to put a minus sign in there for anything, I think it says, anything that's decreasing capital. And the only thing that's decreasing capital on this statement is the owner withdrawals. So we're going to take our subtotal, 18,000, we're going to subtract 2,000, and that gives us $16,000 of capital. So let's review what happened. They began with 7,700, they ended with 16,000, and why did it go up? It went up because the company made a profit. And then they're going to ask us, what's the purpose of the statement of owner's equity? Well, it's to show you how capital changed during the period. Remember, the statement of owner's equity always is for a time period, not a single day. Shows you how how capital changed and why it changed. So the changes in capital during a time period, not a specific date, but during a time period. And that's it. And again, don't forget to do the other version of the problem.